Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. Many people have been asking me to help map out the big picture market cycles. Let's look at the entire history of Bitcoin, analyzing the macro view, and let's take as many data points that we can pull to give you guys the most clear perspective on exactly where the bear market bottom will be. I've got a really important chart that I want you guys to take screenshots of and keep it as a reference point because we're going to be compiling multiple different data points that have been occurring over the last 8+ years of the Bitcoin price history and why it applies to knowing exactly when and where the bear market bottom is going to take place. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure if you're a new guy, go ahead and download my free ebook, Beginner's Guide to Crypto. This is an ebook to teach you guys a lot of the basics for trading and investing into crypto. I know it's going to help you guys out tremendously, which is why I made it free to download. Links are in the description. With that being said, let's jump right into this amazing video today. Alrighty guys, so for the video today, we are going to be talking about the entire price history of Bitcoin, pretty much dating since all the way back in 2011, 2012. So the last 10 years of Bitcoin price history, we're going to go through and I'm going to share with you guys every single data point that you should be focusing in on because this is going to be the most important stuff for understanding when the true cycle low is going to take place. So let's start off first things first. What are the most important things to watch for when you're looking at the big picture view of Bitcoin? And the first thing that I will always say is analyzing the big picture cycles. By analyzing the big picture cycles, we have a much deeper idea of when and where the bear market's going to be. And I always like to say time frames because the time frames are way more accurate than we could ever try and predict the price action. The price action can vary. There's so many different variances and reasons for the price to move, both bearish and bullish. And with our most recent cycle, I think we saw just how volatile the economy can be and how unpredictable it actually can be. Between the pandemic, between them stopping quantitative easing, there's a lot of different things that we hadn't seen before inside of a Bitcoin cycle that caused a lot of volatility. And so with that being said, with the volatility, it's impossible to predict. We don't know exactly where the price structure is going to go, but the time frames are very much consistent and the same all the way through. So let's go through and talk about this. Now, what is a cycle? What is a true market cycle for people that maybe don't understand? A market cycle is when you measure from peak low of a bear market to peak low of a bear market, and that is one cycle. You have the peak low, the bull trend, the bear market, and then the next peak low. That is equal to 4 years from cycle low to cycle low. 4 years is 1,450 days. From that cycle low to this cycle low was 1,428 days. So almost exactly 4 years from the cycle low to the cycle low. Anybody that tries to say 4-year cycles are stupid is simply just an ignorant loser because of the fact we can literally see that every cycle is almost exactly 4 years in between. And so for anybody to sit here and say, oh man, the 4-year cycle doesn't work, I just proved to you that it works. Now we can actually apply it to our current cycle, and it's going to also give us an idea of when our cycle low is going to be. Now measuring from that low, 1,450 days in advance, that's going to be taking us to about the end of November, approximately. So that's where our projected 4-year cycle low is going to be. It could end a little shorter. It could even go a slight bit longer. It really just depends. But we're talking about this not so much as trying to find the exact thing. I'm sharing with you guys to show you that the bear market bottom is coming very close into focus. And we can see that based off of our last 8 years of price history, we followed these 4-year cycles very closely. Now, another big thing I want you guys to remember here, aside from the 4-year cycles, is actually analyzing the Bitcoin halvings. Every one of these dotted lines is actually going to be the Bitcoin halving. And if we go back and look, every single Bitcoin halving is why we see such a big skyrocket in the value. We have a supply shock, and the price always ends up skyrocketing after the halving. We can see that happen here. Price skyrockets, and then we see it happen once again here. So this has been a really important trend that we've all been watching for. Anybody that's following Bitcoin knows that the Bitcoin halvings are a huge reason for why we see the price actually rise. Now, when we're analyzing these halvings, I think it's really important that we talk about the time frames because it's actually programmed inside of Bitcoin's code that every 4 years we're supposed to have one of these Bitcoin halvings. Now, keep in mind that Bitcoin's not programmed specifically through time. And so it's actually programmed through math. And so when we're talking about these halvings, they're projected to be every 4 years, but they're not exactly 4 years apart. It's the same way with the 4-year cycles, right? If we analyze from this cycle low to this cycle low, it was 1,428 days. So almost exactly 4 years, but just barely under. So that's the same thing that's going to apply when we're analyzing time frames as a whole. There's going to be slight variances between them, but what I find is so informational and so amazing is the fact that the time frames are way more consistent than any other form of analysis that I've ever been able to find inside of the market. And so let's go through here and analyze the time frames between the halvings. So our first halving to our second halving was a little over 1,300 days. So, we were a little bit shy of a true 4-year cycle. But once again, guys, that doesn't really matter so much because it's not like Bitcoin's halvings are programmed through time. It's programmed through math and the code of Bitcoin. And so, once again, if we apply the same rule from our second halving to our most recent halving, that was 1,400 days. So, as the time has gotten longer, as we've had more of these Bitcoin halvings, what we're actually seeing is the more time that passes, the closer we're syncing up to a true 4 years in between each cycle, or what I should say, each halving. And so this is something that I like to point out because it gives us an idea of when the next halving is going to be. So let's just go 1,450 days, because that's technically 4 years. That's going to be about the end of April 2024. So I would say really anywhere from about February to June, approximately. Let's just say February to May. That seems more likely. For me, I think that we would have our next Bitcoin halving anywhere from between February to May of 2024. That's the way it's projecting to play out. And if we're looking at based off our last couple, if we have a Bitcoin halving at the same time frames as our first one, that would be December of 2023, the very end of the year. I don't think that we're going to have a shorter one, personally. I think with the more money in Bitcoin, it's more likely that we're going to actually get closer to that 1,450-day threshold. So for me, I'm looking closer towards spring of 2024. Now, another factor I want you guys to consider is let's actually analyze the Bitcoin halving from another perspective. Let's analyze the Bitcoin halving to the cycle low. So our first one was 770 days, and then we'll go from the cycle low to our next Bitcoin halving. So we saw 770 days from our first Bitcoin halving to our first cycle low. And then from our cycle low to our next Bitcoin halving number 2, was 546 days. So what we actually saw was in the bull trend, it lasted longer than the bear market, so to speak. Now, if we apply the same rule of thumb and we go from our Bitcoin halving to our bear market bottom, this one was 882 days. And so we extended about 100 days, which is interesting considering the fact that if we're measuring from the halving to the halving, it was also about 100 days short. And so what we're seeing here is about 100 days shorter in our first cycle compared to our second cycle. But nonetheless, it's still following the same rule of thumbs. The big thing is understanding the 4-year cycle theory, and we followed exactly to that with a 4-year threshold. Now, let's actually analyze from our cycle low to our next Bitcoin halving, our most recent one, and that equals about 518 days. And so a little pattern that we're noticing right off the bat from our halvings is the bull trend. So I should say from our Bitcoin halving until the cycle low, it's always longer than the cycle low to our next Bitcoin halving. And that's been the staple so far in each of the last 2 cycles. Now, if we apply this to where we're at today, and we just apply roughly the same time frames as our last one that we were just through, if we analyze from the Bitcoin halving to where we're at today, we're sitting at about 861 days. Now, once again, if we measure from, technically we haven't had our cycle low, so let's just draw this to about 882. Let's just sync it with our last cycle and just say that's going to be our cycle low. And then let's go over here and draw from the projected cycle low that doesn't exist yet all the way over to about 1,450 days. This is also going to be following pretty much on par with that most recent cycle that we went through. That last bear market from 2016 to pretty much 2018 approximately, or I should say to 2020 because we're analyzing each Bitcoin halving. And so this is kind of an interesting thing. We're already synced up to the 4-year cycles. I've always been following that. We're already following the 4-year cycle timeframes. But then when we actually analyze the Bitcoin halvings, we're seeing that we're also following a pretty similar pattern between each cycle. The bull trend up to the bear market bottom, or I should say, the Bitcoin halving until our bear market bottom is usually longer than the bear market bottom to our next Bitcoin halving. And so it's kind of similar that we're actually seeing the same sort of things playing out in our most recent bear market. We're seeing roughly the same thing. Now in our recent bear market that we're in today, I honestly wouldn't be surprised if we went a little bit longer than the one in 2016 to 2020 approximately. Just a little bit, but nonetheless, I don't think it really matters. The big thing that we're pointing out here is the 4-year cycles, and we only have, a few months, really like 2-3 months left until we're right at that same threshold for our 4-year cycle low. So there's multiple different things that we can pull off of that are basically showing us that, hey, like this is a cycle that's ending, specifically a bear cycle that's ending. And when this bear cycle ends, that will be the completion of our next 4-year cycle. Remember, it's peak low to peak low, so 1,450 days equals 4 years. We're looking at about sometime in November as our projected bear market bottom. And if we're also comparing prior bear markets, our prior bear markets have lasted almost exactly a year. If we go from the peak high to the peak low, this was 413 days, a little over a year. Our cycle in 2018 from peak high to peak low was 364 days, 1 calendar day off from being exactly 1 year. And if we analyze from our cycle high that we made at 69K, and we pretty much go to where we're at today, we're looking at about 315 days. So once again, guys, 364 days is going to be taking us to about November 7th. So 1 year will be November the 8th from our cycle top, which is right on par once again with every single thing that we've seen in prior cycles. I also have this pi cycle indicator drawn over here, and this is also nailed all of the last 4-year cycle bottoms. I'm not saying that it's going to once again follow through, because if we end up actually making one more final low, then technically that would invalidate the pi cycle low. The reason I'm sharing with you guys the pi cycle low is because it pops up every time we have a 4-year cycle bottom. And we're pretty much right on par with that same thing. Technically, we got the signal here, so if we get another low, it would invalidate this. But nonetheless, I'm not super focused on the pi cycle indicator. I'm more focused on the time frames. And I think that that's way more accurate, and I think that I just proved to you guys that it's more accurate based off of the fact that every cycle low to cycle low equals 4 years, and we're still on par with that exact same threshold. On top of that, where our Bitcoin halvings was pretty on par with prior cycles. Like, yes, our price structure looks different. I will be the first to admit that this bear market looks way different than any of the prior bear markets. It's never been quite like this before, and so it's hard to say exact. But that's why I try to share with you guys the time frames, is because even though the price action is varied, even though every cycle is pretty much way different than each other, the time frames are still the same. And that's the big thing I want you guys to remember. It's really easy to get caught up and carried away in a bear market, especially when you're losing profit, or you've bought the top and you're just losing money, your hard-earned money and savings. I know what that's like. And it's during these times where I like to give you guys this analysis to help simplify it for you. Because I know how hard it is when you don't have any idea of what's going on in the markets, you don't know how to analyze charts, and you just don't have a good feel for the market. For me, that's why I stuck with the time frames. The second I found the time frames was where it finally clicked in my head. And then I realized that as long as we're just sticking to the cycles and we're willing to not get too greedy and too over leveraged, we take profits in the bull and then actually scale into the bear, we're much better off each and every time. And it's obviously easier said than done, but when we apply the time frames to what I just said, it makes it immensely easier to sort through all the crap. It's much easier to see through everything. And I mean, when I look at this, it's really easy for me, considering the fact what I'm watching for is really just the projected next 4-year cycle bottom. We're looking at 1,450 days, so basically sometime in November is our cycle low. Everything in our prior cycles is pretty much pinpointing to that exact same threshold. And when we're analyzing and throwing in the data points from our Bitcoin halving, we're really just, pretty much right on par with all of our prior cycles. Maybe not so much 2013, but I would say that that's mainly just because there was significantly less market cap at the time. My guess is the more money that comes into Bitcoin over the given trend over the next 5-10 years plus, the more money that goes into the Bitcoin cycle, the more that cycle is going to follow the Bitcoin halvings, and it's going to be closer to 1,450 days between each Bitcoin halving. It would make sense to me. I mean, it's not like it's guaranteed, and it's not like Bitcoin is truly programmed behind time, but every 4 years we're projected to have another Bitcoin cycle, specifically a Bitcoin halving, and every Bitcoin halving is really the reason why we see the price rocket into new all-time highs. So with us pretty much right on par with the end of this bear market, I think it's really important that we're focusing in on this next trend, because the bear market's almost over. Really the only thing we should focus on is what new cryptos are coming out, what new opportunities there's going to be, what cryptos from the old cycle have continued to develop, continue to build. And really, where are we going to find our next opportunity going into this cycle? This is my thoughts. Wanted to give you guys this video as a way to simplify some things. If you guys found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. You guys can also go ahead and sign up for my VIP. If you want to see all of my private trades, all of my NFT picks, anything that I'm doing with my money, specifically, I'm going to be going heavily into the Pulse Chain ecosystem. So if you guys want to know which cryptos I'm buying out of that ecosystem, how much, and all of that detail, you got to get into my private Discord server. You can sign up for my website. Links are in the description for all of that. Thank you guys so much for tuning in. And with that being said, I'll catch you in the next one. As always, peace out.